Hello, I'm Adam Grimes, and I just want to share a quick pattern with you here today. This is a pattern that many of you are probably familiar with, but the idea is that we have a stock that has made a big move and then consolidates in a sideways range. So if you're going to draw this out schematically, you don't really know what happens to the stock beforehand, but you assume you have some kind of setup for a breakout, probably multiple tests against some kind of resistance level, and then you have a big move up, and then it goes into some type of small range. Now, happening above the breakout level is probably not the most important part of this pattern. So in other words, you might see a smaller breakout and then you might see it come back down below the level. There's nothing magical about this level at all. So if the level breaks, doesn't mean we have to get out of the trade or anything. But what you want to do is watch this consolidation, because if we break down, well, we don't know the future. We very well may break down and continue to trend down. This could be every bar you look at, could be could be the last bar of the uptrend. You don't know that. But if the market, and I say market because it could be a stock, it could be a currency, it could be a commodity, whatever you're looking at, breaks out of the upside, then there's a pretty good chance we're going to see continuation. So that's the big picture idea of what we're looking at. And here's a good example of it. It's being recorded August 20th, 2018, not too long after the market opened, maybe an hour or so. And in SeaWorld Entertainment, SEAS, we have this pattern. We have a breakout, and it probably would have been realistically quite difficult to position on this breakout because it was earnings driven. So you had a range here. You might not have gotten that trade. Some people do like to position before earnings. Personally, I think that brings a lot of unpredictable volatility because, like, okay, let's say you bought 21 here and it closed at 25. Great, that's a great trade. It also could have opened at 12. You don't know, and you don't have any control over that. And buying options is expensive, it's hard to hedge because, implied volatility is higher. So I don't think there's maybe a lot you could do in there, but what you can do is now start watching this range. And if we break out to the upside, it's definitely worth a long entry. Stop location, I think you probably need to be somewhere under this range. I don't think you need to be this far. So I think if you're kind of in this area with your stop, it's probably a pretty good stop location, and then you can play for either one clean swing or for a completely extended trend in for the trend to continue. So that's what we're looking at here. If you want to see more of my work, check out my blog, adamhgrimes.com. You can also find me at marketlifetrading.com. Thank you very much.